Welcome to the channel Get Rich. So today we are going to look into a leading diagnostic chain. So you might know who are the well-established brand in this particular segment. So if you look into that, so we are going to look into this particular company, and then we are going to look into how their revenues are generating, and then we are going to look into what are their geographical locations are, and then their analyze their financial statements, and finally look into their valuation, and then provide price target for next 1 and 2 year horizon. So then let's have a look into it. So the company we are going to look into is Dr Lal Pathlabs Ltd. So they are the established brand. So before going into that, so let's first have a look at some of the industry of this particular company. So they are working in diagnostic chain. So where I see in the next future for the diagnostic chain, they are going to do phenomenally well because after COVID we will become health conscious, and then we will do a lot of for example diagnostics tests. I believe this company is going to do well, and this segment or this sector is going to do pretty good, almost growing about 15%, 10 to 15% CAGR for the next 5 years. That's my expectation. So let's have a look at the particular company. So they are established consumer health brand in diagnostic services. So they have 231 clinical labs, including National Reference Lab at Delhi and Regional Reference Lab at Kolkata. So they have about 3,705 patient service centers, and they have 9,247 pickup points. So if you look at their offerings, what are their different tests they offer? So for example, catalog of 477 test panels, 2,590 pathology tests, and 1,947 radiology and cardiology tests. So they have a scalable business model. That's good. And if you look into their some of their key metrics, so they're the leading and trusted diagnostic company. They have 70 plus years of experience. They service about 85.7 million patients serviced in the last 5 years. So they have 30 NABL accredited labs, and they are the leading and largest diagnostic chain in the country with pan-India presence. So their revenue CAGR for the past 5 years is 15%, and PAT is 22%, and then their ROC is 86%. 231 labs, as I said, they have about 5,008 tests. So they have a stable rating from CRISIL, so that's good. And if you look into their revenue increase, for example, they had from the past quarter they did about 9.8%, but non-COVID revenues it increased about 28.1%, and then patients increased 21.1%, and then samples 25.3%. Why they divide between COVID and non-COVID? Because the COVID test they provide a lot of boost to this particular business, because usually for COVID for the past 2-3 years we have a lot of test, RT-PCR test, antigen test, and so on. So we are doing it, and they are the sole beneficiary, so they are getting revenues from COVID as well. So that's not going to be a sustainable business, because COVID in 1 or 2 years it might disappear, and then their revenues have to fall. So they are already having reduced COVID business, so we will look into it in some time. And if you look into their some of their key metrics, so they have a market cap of 24,400 crores, and they have a PE of 68.2. And if you look into the return on equity is 24.6%. If you look into the debt to equity is 0.11, and then if you look into the current ratio is 3.9. so price to book value 18.3, price to sales 13.1. so it looks pretty expensive, but it also depends on the growth. We have to look into what are their growth prospects are, and then we decide whether it's expensive or not for the given PE. So let's have a look at the price chart. So the price chart it increased to about 4,000 rupees, and then it currently fell to about 2,900 rupees. So so if you look into that, it had a pretty good fall, about 1,000 rupees. So it's somewhere about 25% reduction from their peak value. So let's have a look into their P chart. So if you look into their P chart, it was always trading at around 40 and 60. That's their average trading from 2016 to 2020. And COVID comes, it gives boost to the business, and it suddenly started to trading at around 80 to 100 P, 105 P. Their P re-rated a lot, but then recently their P came back to about 70. So mainly I would say it's COVID boost. Because of the COVID, it is a huge beneficiary, and then their P started to re-rate after because if you see, until March 2020 it was trading somewhere between 40 and 60, and then suddenly it P rises and it reaches to 80 to 100. So Yeah, currently now it is trading at around 68 or 70 PE. It fell from 100 PE to 70. So then let's have a look at their business segments. So if we have a look at their business segments, so they have in quarter 3 financial 2022, they have non-COVID revenue of 438 crores. COVID revenue is 49 crores, and then they have a COVID allied 2 crores, COVID allied 8 crores. So they have about, yeah, still they have about 59 crores or 60 crores from COVID business. So for example, if you look at their previous quarters, they had a huge COVID revenue. Yeah, even in quarter 1 financial 2022, they almost had 200 crores from COVID revenues. But it's going to subside in going ahead. So then that's going to affect a little bit their growth rate because their non-COVID revenue can grow good, but then their COVID revenues will fall. So their total revenue looks like it will be a reduced growth for some time unless this COVID revenue completely goes away. And if you look into their geography wise revenue distribution, they have about 37% in Delhi NCR, and then they have rest of north 29%, east 17%, south 5%, and then west 10%, others 2%. And then if you look into their different operational metrics, so number of clinical laboratories, they increased 38 from financial 18 to 2021. And then the number of PSCs, they also increased 1,552, and then number of PUPs 3,623, and the number of patients, they increased 33%, number of samples, they increased 43% from financial 2018 to 21. So they are increasing, so they are growing their business. That's good. And if you look into their patient increase, they are increasing at a CAGR of 7%, and then test, they are increasing at a CAGR of 9%. So we saw their infrastructure, they have about 216 laboratories, 3,095 patient service centers, and 7,000 pickup units. So that's also increasing. So they have a varied offerings, a lot of tests, pathology tests, radiology and cardiology tests. It's growing. So they also have global operation. They have business in Bangladesh, Nepal and Kenya through its subsidiaries. And the company also receives samples from international locations like Bhutan, Sri Lanka, Myanmar, Malaysia, Nigeria, Saudi Arabia, Maldives, Kenya, Qatar, Kuwait, UAE. So they also receive samples from these places to India to test. And then if you look at their collection network, they have a very good efficient collection network. They have a very good scalable model, so that's pretty good to see. And if you look into their some of their collection networks, they have a variable model which grows with business volume. So they have automated and scalable system. They also they introduced ECG at home service, launched in select cities. So they are also innovating, and they have a very good scalable model. And they also recently introduced for the past 2 years, they entered into a genomics division. So it focuses on genomic testing. It offers a wide range of key tests relating to oncogenomics, neurogenomics, rare disease, and prenatal and postnatal. So the new tests, they are doing spam DNA, Y chromosome tests, and they also have new tie-ups with Caris MI and Caris Tumor Seek. So they have Oncopath niche segment. So they are having different tests. They are also doing these kind of genomic tests. And then if you look into their digital developments, because digitalization is growing, so are they catching up? So if you look into that, they have a digital lab, self-registration kiosks for patient, integrated payment gateway for online payment. They have self-report printing kiosk for 24/7. They're also having e-commerce. So they have online test, health package booking, online payment. They have mobile app. So they are also having logistic automation, lab operation automation, business continuity plan. So they are also doing a lot of digital developments. That's good to see as well. And if you look into their R&D, so they are also doing a lot of R&D collaboration with Merck institutions. They have successful commercialization of different tests: spinobulbar muscular atrophy, sickle cell trio, prenatal mutation detection, Sanger sequencing single variant, Lee syndrome, mitochondrial mutation detection. I have no idea what are these tests are. I have no background in medicine, so I have no idea what these tests are and what are their potentials are. But they mentioned they successfully commercialized these tests, so that's good to see. So they're doing R&D. So, and then if you look into their different sector, they are also doing a digital histopathology. So they have they are also reporting of digital breast cancer panels using AI based algorithms, digital histopathology for remote routing reporting. So they have different opportunities created by this particular segment. So they are also having R&D in this particular area as well. And then if you look into their financial statements, so their revenue is growing about 15% CAGR for the previous years, their EBITDA 22%, their profit before tax 13%, profit after tax 22%, so that's good. And if you look at the revenue, COVID versus non-COVID, their COVID, if you include the total revenue, it's growing about 10%, and the non-COVID business is growing about 28%. So yeah, their COVID revenue, declining COVID revenue subsides some of their growth in the short term. And then if you look at the EBITDA margin, that's also good. If you see, EBITDA margin is 28.5%, but it reduced from 32%. And also all of the margins reduced a little bit from the previous quarter, because I think it's a COVID boost and prices they got are good, then their margins are reducing. And also if you look at the EBITDA margin, so over the different quarters, their EBITDA margin was hovering around 27, 31, 23, 22, 22, and even 18, 19, and currently it's about 28, 31. So, and also profit after tax margin, it's also they are on the higher side now. But then they recently, I think, did acquisition or finished the acquisition with Suburban Diagnostics, and they have a their margin is lesser compared to Dr Lal Path. So in that case, their margin in the short term is going to take a hit, and then they'll have to develop that business to increase their margin to come up back to their original margin. So in the upcoming quarters, expect them to report a lower margin than usual. And if you look at their quarter-over-quarter statements, so their sales are increasing from 292 crores in March 2019 to almost 422 crores in December 2021. And if you look at their net profit, it also increased from 46 crores to 62 crores. They even reported 123 crores in June with a higher operating margin of 31%. Currently, their operating margin reduced to 24% with net profit of 62 crores. So I'm expecting their EBITDA margin is to remain in this level 24, or if not, it can even reduce, because they are going to finalize their Suburban Diagnostics, and they have a lower margin. So I believe their margin is going to reduce in the coming quarters, and then they are going to report even lesser revenues, I believe. So yeah, they have already COVID revenues which are declining. They have a lower margin business they acquired. For the short term, they are going to get a lot of pain because of this COVID. Their P re-rated a lot, and then now after this COVID business is gone, then their P is going to re-rate on the downside. That's what I believe, and my personal opinion. You can have contradicting thoughts, of course. And if you look into their year-over-year growth, so they increased from March 2010 167 crores to almost 1862 crores, and their net profit they increased from 25 crores to almost 358 crores. Their sales growth 10 years 21%, 5 years 14%, 3 years 13%. Their growth is slowing down. And if you look at the profit after growth, their profit growth is 26% for 10 years, and in 5 years is 17%, 3 years 19%, and their return on equity was about 24-23%. And if you look at their balance sheet, so their balance sheet, they are increasing nicely. They are a debt-free company. They almost have no debt. So that's good. And if you look at their cash flow statement, they have a pretty nice cash flow. So they have about 373 crores in March 2021, and then they also have a free cash flow of 36 crores in 2018, 61 crores, 65 crores, and 42 crores in March 2021. So they also have a free cash flow. It's even though it's not growing much, they still have a free cash flow. That's good to see. And if you look at the growth expectation of the analyst, so the revenue, the analyst is expected to reach 2,500 crores in 2023. And they are having profit after tax. They are somewhere looking into 480 to 520 crores. That's analyst expectation. And if you look at the shareholding pattern, the promoter shareholding is slightly reduced, and the FII they are increasing their shares quite a lot until, for example, September, and they slightly reduced in December. And DII are reducing, and they slightly increased in December quarter because of the price fall, I believe. And then if you look into their mutual funds, they are also in the past several months they are selling, or they are not increasing their shares. So if you look into their mutual funds month over month, in August 2021 net selling, September 2021 net selling, December 2021 net selling, November 2021 slide buy, December slide buy, and then January again net selling. And if you look at the different mutual funds who are holding this particular company, it's UTI FlexiCap Fund Regular Fund, and then Kotak Equity, UTI Mid Cap, Motilalas for Long Term Equity Fund Regular, Kotak, and then Mirai Asset Healthcare Fund Regular Growth, Motilalas for Large Mid Cap Fund Regular Growth, DSP, as well as LIC, Tata, HDFC, large and mid cap. So there are a lot of companies are holding this particular company. What they did in the recent quarters, for example, UTI they slightly reduced, Kotak they slightly reduced, and then Motilal was they increased or they started they increased. And if you look at the UTI, they slightly reduced, and if you look at Motilal as well, they increased in January. So some of the mutual fund reduced their shares and some of the mutual fund increased their shares, but in January after the price sale, some of the mutual funds are getting interested to buy more, I believe. And if you look at the valuation section, so their revenue is 1,491 crores in 2021. It's expected to do 1,875 crores in 2022, and I am expecting them to do 2,400 crores in 2023 and 2,650 crores in 2024, with a growth rate of 28% for 2023 and 10% for 2024. So 2023 28%, it's because they are going to acquire Suburban Diagnostics, and after merging it will reduce, it will report higher growth. That's why 28% growth in 2023 because of inorganic growth. And then 2024 I'm expecting them to do about 10%. And then net income 280 crores in 2021, 360 crores in 2022. I'm expecting them to do 420 crores in 2023 and 470 crores in 2024. If we calculate the price target with the current valuation of 68, which is 3,439 rupees for 1 year, 3,848 rupees for 2 years, with a price cumulative growth of 17% for 1 year and 31% for 2 years. But I believe their PE went related to the upside because of this COVID situation, and I believe their PE is come back to their normal range, about 40 to 60 or 50 to 60 or about 50-60. That's my personal expectation. And also if you have to calculate with the fair PE valuation, their growth rate, they are not going astronomically, so they are going about 10 to 15%. Their organic growth is going to be about 10 to 15%. That's what my expectation. So it depends on that growth. I'm not willing to pay PE of more than 50, of course not. So if we calculate with the price target of PE 50, then 1 year price target would be 2,521 rupees and 2 year price target would be 2,821 rupees. The price cumulative growth of negative growth, of course. So yeah, my verdict for this particular stock is, if you are an existing holder, if you have a long-term overview, keep holding. It is in a growing segment, so it's good for the existing investors. But for new investors, if you want to invest in a company, I believe even though it reduced 25% from its peak, I still did not see it as a fair deal or a very, very good deal. Because it can even their PE can relate to the lower side. Depends on the growth. They also are going to have a short time COVID declining COVID revenues, and then they are going to get a beat from their low margin acquisition. So in the short term they are going to face pain, and it is going to take a while before they recover. So I'm not willing to buy this company at this share. I might be wrong, so it can go up and re-rate to again to 80, 90, 100 PE, but personally that's not making sense to me. So my personal opinion is, to existing investors, you can hold the stock. New investors, you can wait for more price correction before you buy in. So that's my personal opinion. I'm not a financial advisor, so please do your own research before investing in any stock. So if you like this video, like, share and comment. If you are new to this channel, please subscribe to this channel, and if you want free newsletters from this channel, please subscribe in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.